Good evening, everyone. We're going to wait for a few more minutes while everybody joins, and then we'll start with the session. Good evening, everyone. I hope you all are doing great. On behalf of the E-Cell, I warmly welcome you all for today's session. I'm Khushi and I'll be your host for today. After conducting a successful session, Startup Unfiltered Episode 1, we are back with another banger and a great speaker. But before we begin with that, it's going to be an interactive session, and I advise you all to write all the questions that you have on the chats, or you can just raise your hands if you want to ask something. Also, one more thing that's very important for you guys is that after the meeting, after the session ends, there's going to be a feedback form that's going to be released. And if you guys don't fill those, you won't be getting any certificates. So make sure you fill the feedback form. Before we begin, I want you all to raise your hands. The people who have attended the episode 1 of Startup Unfilter. Okay, I see many hands. Okay, okay. So, the people who have raised their hands, do you guys have any feedback, any suggestions, anything that you liked about it, anything that you thought that could have been better? You all are advised. You guys can give your feedbacks right now. Yes, Ishan, do you want to say something? Yeah, Kabir. No, I just nobody wants to say something. Okay. So, in that session, we also discussed about startup ideas. So, does anyone have any startup ideas or some idea that you have been working on? You guys can raise your hands if you have, and you can say whatever idea you have right here. Okay, Pranjal, Shivya, Ujjwal. Yeah, you can say one by one. Pranjal, you can open your mic.
So, first of all, good evening, everyone. And I want to start with a simple question. Have you ever needed a book but found it too expensive? Yes, I know. And books are costly, especially for students. And many people avoid going due to high prices. And at the same time, unused books are lying around. So there is a gap. तो इस गैप को फिल करने के लिए हमारे पास एक मेरे पास एक आइडिया है. एंड द आइडिया वाज बुक ब्रिज. And a book bridge is a peer-to-peer book renting platform, and where user can list their unused books, and other can rent them at very low cost. And by doing this, we can do better utilization of our resources. Plus, to maintaining the trust factor, we will include their rating and review system. Plus, so make it safe and reliable. And also, our vision is to make a community of readers where books are not kept in shelves. They should be shared. And that's book this. Thank you.
Okay, Pranjal, that was a really nice idea, and I think it will help many people, many passionate readers like me who struggle to find cheap books. Okay. Ujjwal, you can open your mic and share your idea.
Good evening, everyone. My name is Ujjwal Mishra, and I am a first year CSE AIML student of SOIT RGPV. Today, I am going to pitch a startup idea among us. The startup is Fix It Now. We are not, there is a everyday problem with everyone that small devices like fan and etc. stops working. Imagine the situation that's your fan stops working a day before exam. You don't know how to fix it, and you don't know the electrician and the local shops where to go. But we have a solution. The problem is this is very common problem faced by everyone, either they are students or household persons across India, that there are many small devices that stops working when we need. So I have a solution. To solve this, we introduce Fix It Now, a platform that connects users with nearby verified technicians instantly. With just a few clicks, a user can post their problems, and nearby service providers can accept the request and solve it quickly. Now, moving forward, that how it works. So the application works like first the user can post their problem. We match the local technicians or electricians according to their problems, and fix the problem after sending to local technicians or electricians to their homes or where they want to fix their problem. Now moving forward to market opportunity, like India has millions of students living in households, PGs, and rented homes. The demand for quick repair service is huge, but the supply is unorganized. So we make it like there is an organized platform which connects the local technicians and the users so they can fix their problems instantly. Now we can talk about revenue model. So the our revenue model is a small service commission, like the charge of fixing electrician is 500. So we add on some charge to it for calling electricians to the user, and this charge helps us to improve our application or our startup. Second, premium listings. Premium listings for premium electricians or technicians that grow our platform. And third, and best idea is local advertisement. So from this we can grow our platforms and earn revenue. Now this saves times of people. This creates job for local technicians and improves daily life convenience. So the conclusion is we are not fixing the devices, we are fixing everyday problems of India. Thank you.
Okay, Ujjwal, that's a great idea. Keep working on it. I guess we'll discuss all the other ideas that are left after the session. Okay. So now it's time to introduce our speaker for today. Their journey and insights make them the perfect person to guide us. So without any further delay, let's welcome Madhavi Yadav ma'am, a startup investment consultant and a co-host at LinkedIn Local Bhopal, actively contributing to the entrepreneurial community. They have also been part of the PE and VC executive program at IIM Calcutta, showcasing strong expertise in startup investments. So, without taking any more time, ma'am, you can take all your time, and the stage is all yours.
Thank you, Kushi, for the very kind welcome. I did hear a couple of pitches towards the end. Okay, so how do you guys want me to start? Should I directly take in the questions, or do you guys want me to give you a little bit of presentation first and then we take the questions? You can drop in the chat box so that I know how to proceed.
Ma'am, we can start with the presentation and then the questions.
Sure. So I would like if you guys be a little more interactive so that you can also take away the most from this session. Otherwise, it's just me talking and you guys listening, and then it won't be very useful to you, right? Okay, let me share my presentation and then we will take the questions. Let me know if my screen is visible. Can you guys see it?
Yes, ma'am, it's visible.
Okay. So a little bit about myself first. Hi, guys. I'm Madhvi. I am a venture capital professional. I have spent more than 4 years in the startup ecosystem, primarily working with the early stage startups. So, anywhere student founders till people raising their checks up till 5 CR. That's where I've worked in majorly. So I've done my BSc from Barkatullah University, and then post that I went on to work for 4 or 5 years in the ground. I worked in one of the AICs, which is your Atal Incubation Center. These are supported by Niti Aayog, Startup India. And then I worked at India's largest accelerator, which is your Vadhani Foundation. I used to help startups raise capital there. So we have helped, listening numbers are small. So we have raised 260 plus startups, raised 140 plus CRM capital, majorly through government grants and angels and other like VCs and all. Yeah, that's a little bit about myself. So let me start with what exactly is a startup first. You guys have any idea what is a startup and how is it different from your regular businesses? Anyone? Okay. I'll take you through Government of India's latest definition of startups. I'll just read it out. So any entity, private limited, LLP registered or cooperative society incorporated in India, not older than 10 years and 20 years for deep tech, of course, with an annual turnover of under 200 CR, working on innovation. Now, this is very important, working on innovation, development, or improvement of products, processes, services, and is not restructuring of an existing business, right? So there are your traditional regular businesses and there is startup, and how a startup stands out in the way they bring in innovation. So ideally you guys would have heard, I'm sure you watch a lot of Shark Tank and everything, right? Yeah. They come in with a problem and then they offer a solution to it. And that is how you distinguish, and of course they make a business out of it. That is how you distinguish a regular business from a startup. So regular businesses are your local restaurants, salons, shops. Now, if somebody decides to make an app and aggregate all of the salons in an area, that becomes a startup. And I'm sure that is what Urban Company does, right? We have those examples. But any regular functioning business on its own is a business, and anything that offers a better solution to aggregate all of this and make things easier for people would be a startup, right? So I heard your pitches. That is what you guys were trying to do, right? Offer a solution to an existing problem. So um, there are two ways you can decide to run a startup. So if, say for example, you have capital of your own, so now today if I want to start a startup of my own, I need capital to run it, right? And usually what people tend to do is they spend their own money initially, and that's how they become bootstrapped. So bootstrapping is when you put in your own money to run the startup, but at later stages, when the capital runs out, you don't have enough money to keep your venture running, right? That is when you look for external funding. That's where your VC venture capital comes into the picture. Uh, is this clear to you all? Is it too fast? You can let me know. I can tone it down and I can take questions also in the middle, right? So, yeah, okay. So, everybody understands bootstrapped and VC funded startups. Great examples of bootstrapped businesses are Zerodha and Zoho. Both of them were bootstrapped. They did not raise any money from anywhere and have gone on to become billion-dollar companies. Of course, the founders, the business was self-sustainable in the way that it ran itself. So they didn't need to seek for external funding. That's how they could be bootstrapped. But major businesses do need external funding to scale and run at later stages, right? So, yeah, now I'll cover what are the different funding stages. So, there are primarily four funding stages, and keep in mind that uh, this is not traditionally how you go about raising funding. I mean, it depends on company to company. You can skip rounds as well, and you can the checks are defined, but there are bridge rounds as well. Like, so say for example, between stage 1 and 2, if a founder needs some more capital before actually going on to the next round, they would be raising a bridge round. So that also happens. But primarily, we have four categories, or rather stages of funding. First one is pre-seed, wherein you raise anywhere 0 to 50 lakhs. And this is majorly where a lot of startups are just bootstrapped also. So founders like to put in their own money first and run the business, get some traction, and then they go on to raise their seed rounds. So, yeah, so self, friends and family, we also call it a friends and family round also, if not pre-seed. Then there are grants, all of these things, right? Seed round, the check size is anywhere between 50 lakhs to 5 cr. Now, that's where your angels and angel networks and small stage VCs come in. You guys have any idea on what angels are? Who is an angel that funds your startup? Anybody knows? Come on, guys, you can speak. And I know you watch enough Shark Tank. Yeah, Ishan, go on.
Angel investors provide seed funding to startups.
Yeah, so who is an angel investor? Okay, so I'll tell you who is an angel investor. So till last year, anybody who could help, right? Who could help me, give me some money to run my business in exchange of equity. So any individual, right? So say for example, Ujjwal is starting a startup, and now he needs to raise some money to scale the business. So Ishan comes in and offers to give him 20 lakhs, right? In exchange of whatever equity they decide amongst themselves. It ranges anywhere between 5 to 15%. That is the generic range. It can be more or less as well, depending on their personal understanding. And of course, there's a little bit of documentation involved, but not that serious as it is in VCs and everything. So any individual that used to come and chip in, put in some money in the startup to help it scale, that would be your angel investor. But last year, SEBI changed the guidelines. So SEBI is this body which regulates all of the fundings and everything in India, right? So SEBI changed the guidelines, and because every what was happening. So this is funny. a lot of people in India, they would, students like you, student founders, right? Of course, you guys don't have a lot of money, right, to put in your businesses and everything. So I know that Ishan is now starting a startup, and Ishan comes to me that he needs some money to now run this business. So what I would do is I would give him any capital, 1 lakhs, 2 lakhs, depending on whatever we have decided mutually, and I would call myself an angel investor, right? So a lot of people on LinkedIn, if you would go on to see, every third person was calling himself or herself as an angel investor. And what was happening now was a lot of naive founders, like people who don't know much about the ecosystem, first time founders, they would fall into this trap. So they would run their business, do everything, but somehow end up giving 20 to 30% of their equity to those angels. So a lot of defaults and malpractices were happening because of that. So SEBI decided to change that rule. Now, if I want to call myself an angel investor, and if I want to legally invest in a startup, I need to have at least, now you guys can verify the numbers. I'm not sure if I'm correct on that, but I need to have at least 1 CR of annual recurring income and 7 to 8 CR of tangible assets worth to me, right? That's how I can now go on to becoming register myself as an angel investor with SEBI. That's how now I'm legally allowed to become an angel investor, right? But that is a very legal bound way. Now, what people do now again is there's a loophole. Ishan would want me to invest again 10 lakhs, 20 lakhs of capital he needs. Now, there's no regulation on how you can invest as family or friends. So I would not get to call myself an angel investor, but I can still invest as friends or family. So that clause is still loopy there. Yeah. So I took it a little far. So we have covered pre-seed, then seed rounds. Angel networks also exist. So there is Kerala Angel Network, Mumbai Angel Network. You guys can later go and read more about it, wherein a couple of individuals, like a group of individuals, comes together, pools in some money, and then they scout startups. So it's like a body of sorts, wherein individual people who have some money to them and want to invest, they pool in their money and they invest collectively. So that is your whole network investing, and then however whoever is put in whatever capital, they get their shares based on that. But it is a whole network investing. Then of course there are seed VCs and things like those, right? And in seed round you have a lot of grants as well, from government of India, which I'll cover later, what grant or options are available for you guys. So those checks are also anywhere up till 2 CR. I think Byrax is biggest. They give up to 2 CR of grant to startups in India. Then there is Series A, Series B, Series C as well. And then there are pre-IPO investings also. Series A, as you can see, is anywhere between 10 CR to 50 CR. And then Series B is 50 CR to 200 CR. Now, of course, a lot of startups skip these stages also, raise earlier, raise later, all that happens. Um, but this is a very later stage thing, so I'm not covering. Of course, if you guys have any questions, you can put in the chat box. I can take it up later, right? Yeah. So these are all the stages of funding. Then we come to actually who. So this is what I covered actually in the previous this thing also, but we'll just take an overview of what stages and what people can be involved, like who are the investors actually in the different stages. Your friends and family, anywhere between 1 lakhs to 20 lakhs, even 50 lakhs also, if somebody has that kind of capital. Then of course I covered angel investors, so 10 lakhs to 1 CR. Then angel networks, they have more money because obviously they're individuals coming together to invest. So there are some examples also, like Let's Venture would be an angel network. Then there is Indian Angel Network, of course, IN. There's KN, Kerala Angel Network. If family invests more than 20 lakhs, so there is no regulation. See, there's no one defining, like these are generic stages and generic what do you call range of money that people invest. If family invests more than 20 lakhs, It's really good. Why? Because the equity stays, first of all, within family. So you're not giving it away to an external investor, right? And the more or less your startup stays bootstrapped, unless, so say for example your father is investing, of course in most Indian cases there would be no understanding between you and in your father. Like on paper he would have not asked for a 20% 30% equity. So your startup again stays more or less bootstrapped for you, right? So there is not a lot of division in your cap table, right? So it's well and good if they invest more than 20 lakhs, the startup stays more or less bootstrapped unless you have given away equity, which is good for your startup. Yeah. So now next is venture capital. I covered that. Seed to Series B, Series C also happens. So 2 CR to 200 CR. All of your popular startups, Zomato, Swiggy, Pronto, Zepto, all these startups have raised venture capital money. If you follow startup news in India, you would see these headlines every other day. Some startup would have reached their Series A round, Series B round. And in venture capital, the distinction in Indian ecosystem, at least, also is whether they are raising from Indian VCs or VCs outside of India, right? So they also have an option to get VCs from Europe and USA. That also happens. Then there is, of course, once you go public. So all of the companies before IPO, they are called. The whole market is called private market, right? And private equity happens when you become go or are planning to go for your IPO, right? That's like anywhere starting from 500 CR to thousands of CRs. Okay, that's big money. So that comes under your private equity. Then when venture capital is done till Series C and everything. So your family offices and private equity people come in and they invest. So those are really big rounds. Happen for a very few startups in India. Just a second. Okay. So earlier I was talking about a couple of grants that are available. So particularly for you guys, I assume this is an ESL event, and a lot of you are interested in entrepreneurship, right? And some of you also have ideas that you pitched before the session. Okay. So if you do materialize your idea, you make a good pitch deck out of it. You do some validation, do some customer validation, go to the market and see if there's a demand. And basically, if you just start working on your idea, for those kind of startups, there are a lot of government grants available. You have firstly, you have Startup India Seed Fund Scheme. So all of these grants have their own guidelines and regulations. Right. Startup India Seed Fund Scheme is for startups which are less than 2 years of age. So if your company registration exceeds 2 years of age, then you're not eligible for this. So most startups in India go for this grant or funding in their early stages. So the good thing is the CCD option, which is your debenture option, wherein you share some equity with the government, that is up to 50 lakhs. So if you take in CCD, you get up to 50 lakhs. Otherwise, grants is up till only 20 lakhs. Grants may, you don't have to pay the money back. I'm not sure if you guys knew this, but yeah, so that is sort of the free money which this slide talks about. So only in grants though. Other forms of investing also exist. So you call them instruments. So instruments would be your CCD and ESOPs, those things, right? But grants may don't have to pay any money back. Same like that, you have Nidhi Prayas grant. So Startup India, SISFS, Nidhi Prayas, and Baira grants is something I've personally worked with the bodies to get my own startups funded. And if you, okay, what risks do venture capitalists? Right, a lot of risks. I'll cover that. So let me just explain these couple of grants that are available. There's Nidhi Prayas, which is by the DST. So DST is your Department of Science and Technology. It's a government grant up to 10 lakhs. Then there are BIRAC grants, which is a bigger grant. I talked about it earlier. You get up to 2 CR, so 50 lakhs to 2 CR. But It is focused on startups that are heavily into research. So people, so I had this one of the startups that I was working with was trying to find a cure for cancer. So these are very research heavy plus capital intensive startups. So they need a lot of money to do research itself. That's why these grants are given by the government, so that they can meanwhile continue their research and come to some sort of commercialization for the startup. So that is up to 2 CR, but again focused and limited to biotech and healthcare based startups. Then there is AIM's own fund, which is up to 1 CR. So you can read about all this. You can take a screenshot if you want. The information is available on government sites, right? What are the guidelines, how to approach them, all of this. This is available. Then you have a lot of state government schemes also. So, for example, Rajasthan has something of this body called iStart, and so in that they have grants up to 10 to 20 lakhs for startups, and somehow it's not limited to Rajasthan. So, a company based in MP or anywhere else, they can also approach them through their website, of course, and apply for these grants, right? There's also a useful grant that you guys can explore, which is your EIR. So EIR stands for Entrepreneur in Residence. It's by government. They give you 3 lakhs of capital, but the rules are a little rigid. So you cannot be involved with any other job, right? So you have to be completely focused on your startup only, and you go to these incubators, whoever is having that scheme under them, you go to them, you apply. If you get selected, you also get a place to stay there, and you get to work on your idea. So that's also there. Then you guys can take a screenshot of this, right? Okay, so quickly I'll cover what investors are actually looking for when they go um, look for startups to invest in. Number one, and very important, this is very true of early stage funding, at least I would say, because when your startup idea is that new, you don't have a lot of traction or market validation under you, right? Neither you have a lot of revenue. So how do you actually go on to judge a startup whether this will succeed or not, or will fail, whatever would happen? We don't know. So the number one bet that most investors take on is the team. So the founders, of course. Now, founders again, investors look for their pedigree, which is whether they are from IITs or IIMs. It is very true. People from IITs and IIMs get funding a lot more quickly than other people. So pedigree helps you, of course, everywhere. But other than that, one more factor that you look for is the conviction, right? So whether this person is someone you can trust, matlab basically ye banda dhanda kar payega ya nahi, right? That's what you look for in a founder. And something what I also personally look for in founders at an early stage is whether they have some sort of domain experience, right? अब कोई founder आया है मेरे पास, मे बी कोई डीप टेक स्टार्टअप लेके, a lot of times I've seen, or say for example fintech का example लेते हैं, it would be easier for you to understand. Fintech is your financial services, right? So a lot of founders who have worked in this industry for 7 years, 10 years, 14 years, and the co-founder is also in some sort of way worked in the same sort of industry, right? So then it becomes easier to bet on them. So yeah, founders number one, then the market, of course. If is this problem worth solving at scale, right? तो कितना market cap है आपके पास? Whether there's a justifiable TAM also or not. All these terms, you guys, you should definitely note down and read up on them. I know you guys are too young, so you must not be aware of these terms, but this is what, if in case, at all you start working on your idea in later stages, you guys would need funding, right? And if you're not bootstrapping. So this is all the terms. These are the basic terms that investors actually want you to know. So your market size में आपका टैम सैम स्वम हो गया. If somebody is from commerce background, they would know. So is the market size big enough, and is the problem worth solving? So all these validations happen. So this is what investors look for. Then of course third point is, now these two are crucial at early stage funding. Why? Because again, I said there's not a lot of revenue happening, right? There's not a lot of market proof happening at that early stage. So these are the two most important things. And then of course we look for the business model, and um, how, what is your moat basically. So moat is, why can't somebody copy you, right? What is that differentiating factor? So technology moat hai, ya property data hai, ya all these things, right? This is what an investor looks for. Pitch deck, I'm sure you guys must have some sort of idea how to design a pitch deck, so I won't go into the detail, but these are some of the things that they have to be there. I mean, agar ye nahi hai to more or less the chances are that your pitch deck would get rejected, because I mean, this is the basic of the slides that you need to have. So your problem, solution, market size, what product are you building, तो थोड़े से screenshots, demo, या if you have pictures on ground, अगर आपका agri-tech startup है, say for example, so with that machine, if you have some sort of video or photo that you can attach, traction, of course, um, what are the, what are the numbers, how does it look like, whether the pilots you have done, how's the response, what is the need, if you have any sort of LOIs from people, which is your soft commitment, letter of intents, and those things. If you have that as traction that you can put, then basic business model, team slides, and the ask. The ask is how much are you raising, right? So these are some of the things that you need to include in a pitch deck. Yeah, so I think this would be all from my end from a presentation point of view. But now, of course, we can take questions. So if you guys have any questions, you can just put in the chat box, and then I can take it one by one. Just a second, please. Okay, firstly, Ashif had asked, what risks do venture capitalists face when investing in startups? First and foremost, the startup shutting down, of course, right? That's the risk. Second one would be very common in India, is that along the way, somehow founders, once they raise capital, they get carried away in getting bigger office spaces or spending heavily on marketing, basically burning investors' money and not getting as much traction as it was promised to the investor. So these are a couple of risks that obviously they are true of any industry, but majorly venture capitalists face this. Second question is from Pranjal. How do we decide whether to bootstrap or go for funding in the early stage? Interesting. So Pranjal, again, if you're okay sharing good amount of equity, right, you can definitely go for funding. But I'll tell you, there's a very smart way to go about things. And this I'm speaking from purely from my experience when early stage companies, aged anywhere between 1 to 3 years, when they come to me, naturally, advisable thing to do for them is that they go and explore these government schemes. Even if you're going for a CCD, which is your compulsory convertible debenture, even if you're going for that instrument, the equity for government funding is very less. It's very small as compared to VCs and angels and those things. See, ultimately, जो भी आप business बना रहे हो, you have to understand how much of it you're willing to give it away, the profits, right? So the better advice is, if you're raising anywhere between 50 lakhs, 20 lakhs, 30 lakhs, and ye, if you're structured enough, आपको easily मिल जाते हैं ये funding, right? So at early stages, it is always advised, if you cannot put in your own money, right, you can explore these government grants and schemes and fundings, कुछ मैंने वहाँ पे list किए थे, and of course you can explore on your own. But now again, जब ये investment committee बैठती है, IC, right? तो IC always asks कि अभी तक आपने अपना खुद का पैसा कितना लगाया. This is a prominent question in for an investment committee asks a founder. आप किसी भी IC में बैठोगे, this question will be thrown at you, right? So you then again this shows your own conviction कि आप अपने startup को लेके कितने serious थे. Right, and now you would say कि मैं खुद का पैसा क्यों लगाऊंगा, but the thing is if it is your idea तो आप खुद का पैसा क्यों नहीं लगाओगे, right? So first 5 to 10 lakhs, the general trend is that the founder tries to invest his own money. Agar in any way they're not able to do it. They are student founders like you guys, they don't have money to invest of their own, then of course at early stage up to 1 CR tak to usually you can go for these government funds and all. And then, of course, as your startup grows, you can explore angel networks and these things. What's something founders think investors care about that they actually don't? Funnily, market size. So, and a lot of unnecessary data. So I've seen a lot of decks, मतलब majority 8 out of 10 decks would have a lot of data जो कि आप Google में easily डाल के निकाल सकते हो. अब मुझे आज एक startup idea आया है कि I can start a lending services का platform, right? तो मैं उसमें जाके data तो extract out easily कर सकती हूँ Google पे कि what is the market size available in India, क्या है, कितना, and it's a $1 billion market and all that, you know. Investors at first pitch really don't care about that data because data is extractable. What they're looking for is conviction again in the founder and of course traction, which is your revenue, yeah, some sort of validation to your idea. That is what they're looking for. So if you crowd your pitch deck with a lot of unnecessary data and numbers, investors really don't care about that. Okay, Sneha asks, let me know, guys. You can give a thumbs up if the answer was, if you're satisfied with the answer or you want me to take it more further. Can do that also. Sneha asked, how can we practically test and validate a startup idea with minimum resource before investing time and money? Going on the field, always going on the field. So best of the VCs in India, like your bigger VCs, you know, transition VCs, Bloom Ventures, these people, I have personally spoken to them, and you know, partners have told me that they personally go and speak to the customers. So that is the level of commitment that VCs show in your startup also. So you as a founder, the least you can do is get on ground and speak to people, speak to as many people as you can, and that's how you get your primary validation of your startup, whether there's a need, right? So speaking to people, basic market research, basic validation that you would do. And if there's a traction, now say for example you were working on a SaaS platform, right? You roll it out. There's obviously a beta version of apps and those things, or if it is just a website based platform, so you roll it out to a handful of those people that you spoke with, and you just tell them ki kuch karna nahi hai, you just test it out and give me the feedback. Feedback will tell you enough. Matlab, don't chase a problem, a solution where the problem does not exist. You know, a lot of founders early on they get carried away by the solution, but they forget whether there actually existed a problem to begin with. So that's how you can early on you can decide how you should go about. And a lot of times what happens when you get into the field, right, you're speaking to a lot of people, you also pivot a lot. Pivot ka matlab aap baat karte ho jo your potential customers की, whether you know this is the solution I'm trying to build, तो आपको समझ में आता है कि maybe you can modify it in a certain way. So that also happen. Startup life cycle में pivots भी होते हैं बहुत सारे, which again you get to know as you build on the ground. But one thing I would always say, don't just assume there exists a problem just because you think there's a problem. You have to talk to enough number of people. Okay, next question. Shivya, as a venture capitalist, which domain do you think would flourish in current geopolitical situations? Of course, deep tech. Okay, you have to find tech solutions to make things better. You have to find a lot of defense tech also. You, because you specifically asked geopolitical, right? So, this is not very popularized, but in India, Indian military, Air Force, and all of the defense bodies have their own funds. I was working with this startup called Evigway Technologies. They build drone tech solutions for Indian Army. You can Google it. Because I worked closely with that founder. So they have recently logged in 100 CR consignment with the Indian Army. Right. So a lot of defense tech, but then defense tech also somehow comes in deep tech only. So, deep tech, of course, is one field. Ab deep tech ke under hi, some people distinguish, but largely it comes under that only. Climate-based solutions also, because obviously we're um, headed towards a global warming, global tragedy happening with climate everywhere, right? So, climate tech and deep tech would be two most hot domains right now. How can students start building something meaningful while still in college? Kushi, the first thing, again, as I said, would be to get on ground and talk to people. The more you would interact with people, the more you would know whether there's a need for this solution or not, right? And just be very observant. Matlab, inherently, you have to be very, very vigilant in observing what all problems exist around you. If there's a major problem that you can figure out early on, ki yaar, this is something all of my peers also go through. Just say, I'll give you a very simple example, nothing complicated, right? A lot of females, this is particular to females, but uh, figure out these sanitary problems, right? Washrooms ka problem hai, ya fir you have these what do you call sanitizers for your pots, right? So those things. So people figure it out, right? Inherently, if you just observe कि यार इस चीज से problem होती है, and if whether I can convert it into a business and sell something of it, that would be a good start as a student, I would say. But again, don't get carried away and look for maybe consumer based startups wherein you have to sell something कि आपने D2C कुछ start कर लिया, you don't have that kind of capital. D2C businesses are capital intensive. D2C stands for direct to consumer कि आप कुछ product बेचने लग गए. At your stage, it would be a little difficult to manage inventory, get the consignment, those things, right? So maybe you can focus on SaaS based businesses, offer software as a solution, all of your engineers. I'm sure you can do better in that domain. So yeah, just by observing and talking to people, you can figure out if there's a problem and how you can solve it better than any of the startups. And let me tell you one thing, guys, if you think there's a problem existing, just go on the internet, you'll find 10 startups at least solving for that problem, right? So you have to study those startups and try to come up with something that all of the other 10 startups are not doing. That's when you can actually scale. Yeah. So next question. Um, Have you ever seen a startup receiving investment mainly because of the founder, even if the idea wasn't great? Okay, so there's a saying in the startup ecosystem, there are no great ideas, only great executions. So I agree with you, the startup idea may not be as great, but there has to be something great about that founder or the startup in itself. It could be their revenue, their customer validation, or something must be great about them for them to be raising funds, right? I mean, this is not your regular exam की teachers के favorite हुए तो आपको 2 marks extra मिल जाएंगे. Ultimately, if I am putting my money, I'm doing it with the intention कि कल को if Aryan has asked for money, मुझे at least उसका 20% 30% return करके देगा वो. Of course, again, inflation adjusted, right? That's why I'm putting my money. Ultimately, you guys have to know that VCs are also doing a business. So nobody, even only the government is betting on you. Nobody else. All of the private investors, angels, VCs, all of them, they're giving you money so that you can return them that money with some sort of profit, right? So it rarely happens if the idea wasn't great, they just invested. This happens in one peculiar case when the startup founder is a second time or a time founder. So, for example, Dipinder Goyal. You guys have seen that chip he was wearing in one of the podcasts. I'm sure you must have, right? So, there isn't a lot of validation for that product yet. But when he raised a friends and family round, I don't remember the exact number, but I think he managed to raise somewhere around 40 million just from friends and family. Why? Because he's a serial founder. He knows how to scale businesses. He's done that before, right? And you wouldn't believe some of those family and friends round में जो investors they were the people working in Zomato. That's how much they trust him as a founder, right? So that also happens. Time will tell whether it was a great product or not, whether it succeeds or not. But these are very peculiar cases. Outliers are everywhere. But in, of course, early stages and as a first time founder, most people, it's highly unlikely that anybody would invest if your idea was not great, right? Ishan has asked the first government grant in the PPT, which doesn't require giving up equity or returning the money, then the competition will be high for claiming it. So, is there any standard set by the government? Yeah, there is. So consumer focused startups don't get grants. So you guys have to understand grants are only for startups who are trying to solve for a very serious problem. So they are in the space of अलग अलग domain specific grants भी होते हैं, right? There's a popular agri specific grant which is given by your iHubs. So iHubs are these incubator bodies at your IITs and everything. Guys, Google IIT Ropar पे एक iHub है and they are agri-tech focused. So they give you 10 lakhs, 20 lakhs money. Now, Government of India's objective with this is to encourage entrepreneurship, and in return the startup is able to do some sort of job creation. So this is purely from encouragement point of view. And grants, to come back to your question, they are limited to very specific domains. So your agri tech, deep tech or medical tech, people trying to find solutions for serious illnesses, chronic illnesses, those things. तो हर स्टार्टअप को ग्रांट एलिजिबल होता भी नहीं है. अगर कल को आई एम ट्राइंग टू मेक अ प्रोडक्ट as in I mean, no good ideas coming to my mind. If I'm just selling a product, say for example, Daily Objects करके company and they've also recently raised. I'm sure you guys must be aware they sell phone cases and everything, right? तो अगर मैं कुछ एक simple product ही बेच रही हूँ, right? I won't get a grant for that. You get grant for research focused startups majorly. And yes, competition वहाँ पे भी है, but do you guys want me to go deeper into this because there's a little bit more on this, or is this fine? Okay, you guys want me to go a bit deeper? Okay. So what happens with deep tech companies? They have a longer commercialization period, right? So the product in itself takes somewhere around 7 to 8 years to come to the market, and they are very capital intensive on their own. ठीक है तो 10-20 lakhs of grant money is not a lot of money if you look at it that way, right? And government also makes sure that this grant money is released in tranches. So tranches is nothing but basically your milestone. So they would set the funding body, they would set some sort of milestones for you. It could be um, reaching a certain level of TRL level. So TRL stands for technology readiness levels. It is a 10 band thing. Okay, you can Google it. 1 to 10 करके stages होते हैं, and you have to keep developing your prototype in a way that you're exceeding your TRL levels. So, just say if I'm going to pitch to this funding body, right? The investor will always ask you what TRL level are you at. So I would say कि I'm at TRL level 3, 4. सबके अलग अलग बैंड्स के अपने definitions हैं. So in a way you have to show proof that you're growing. Milestone basis पे ही tranche release होता है. कभी भी if it is promised कि आपने 20 लाख का grant raise कर लिया है तो 20 लाख तुरंत आपके account में नहीं आते हैं. It comes in like पहला tranche होगा 5 लाख का या जैसे जैसे जो भी milestone set हुआ है ना वहाँ पे उस basis पे it keeps releasing. So I mean government is also not stupid, right? So there are all these different guidelines for each grant. So that keeps happening, and competition is there, of course, in every field, whether it is an equity based fund or a grant, anything. The competition is there. Okay, that's about it. Next, I think we have a last question. What key factors do investors look for before deciding to fund a startup? This, I think, I more or less covered, right? I mean, there are a lot of components. Depends on stage also. In early stage funding, pre-seed and all, primarily they look for whether how competent the founder is, kitna market validation kiya hai. If there's some sort of traction happening. So traction is just not money. There's just not revenue. Traction could be, say for example, the number of downloads or the number of visits on your site if you've built one, or if you've put in a interest form to kitne logon ne wo bhara hai. So those type of validation people look for in early stage funding. Later then you have your of course numbers. Everything is a number game in VC ecosystem. So at later stages, series E, series B and all, it is at scale, so they look for a lot of numbers and whether this startup is going for merger and acquisition or it can survive on its own. So those sort of things that they look for. How actually valuation of a startup is calculated by investors? Interesting. Always with the help of a CA. It's a very finance specific thing. So CAs are involved. Valuation is not something you just decide in your mind and then the investor agrees. That rarely happens. They make a CA sit down. आपके books के proper due diligences होते हैं. Based on that, a CA decides your valuation. If you don't have a CA, investors most likely have a CA in their due diligence team. So that's how. What is the best way to ensure trust, and what sort of trust and reliability in the early stage? Ujjwal, if you can just elaborate your question. I did not understand. What is the first step you recommend for students starting a startup? Don't drop out of college. Please don't. I know it sounds very fancy to read up all these stories. Mark Zuckerberg left, but you have to understand he dropped out of an Ivy League. So focus on good education, because in all of the traditional senses, people look for your education, investors look for your education, or in very few cases, like one or two cases, the startup was booming that well, it was doing so well for itself that the founder had to drop out. Otherwise, please don't get carried away. That also does not mean that you stop working on your idea. Keep working, do your ground research enough, do enough customer validation before thinking of next steps. Reach out to your E-Cell if your college has an incubator, right? Reach out to that incubation center, or you have AICs across India, your government set up incubations. So incubations and accelerators here play a major role for student founders. They teach you how to scale, they help you refine your business model, sorry. They also make your deck investor ready, so they help you basically with everything. You There are plenty accelerators in India, plenty of incubations in India. Just one thing, some of the incubation centers will try to take up equity just for incubating you. I'm warning you guys, that does not happen. It's not true. They're just making a fool out of you. Most incubations are for free, but they try to charge you as an incubation fee. So somewhere around 0.5 to 1.5% of equity they would try to charge you. Look for an incubation which is free of cost. You can seek help virtually. Those things are there. So do your due diligence on your part. That's how you can scale as a student. Don't drop out of college, please. Ridhi is asking what was the most difficult phase in your journey and how did you overcome it? Um, okay, difficult. I mean, see, all of my journey has been a little difficult because I don't come from this background. I am not from a pedigree college. So I was almost from a dummy college, so I did not even get placements right there. That happened, and this field in itself is very it's a little tricky to crack, right? So proving myself in initial stages was a little challenging, but if you put in enough work, if you get your hands dirty, you eventually do find your path. So one thing I can just think of is that not coming from an exceptional college was my biggest drawback, but I think over time I somehow have managed to surpass it. So that's good. um any book or any YouTube video that you would. Yes, YC Combinators whole course. It is free of cost, available on YouTube. I recommend it to everyone. How to start a startup. That is the best course available. It's a 8, 9 year, 10-year-old playlist. There's a whole playlist. It's by Y Combinator's founder. It's the best course that there is for anybody who wants to start up. You guys are aware of Y Combinator? If you're not, just read up. It's world's biggest, largest accelerator that there is. And towards the end of their cohorts, they invest also. So if you would see on LinkedIn, a lot of founders have now started to mention their cohorts. So YC Winter 26, something they would mention based on whenever they got selected. So it's one of the largest accelerators in the world. And there's a free of course available on YouTube, how to start a startup. Uh, that is any day, it's a must watch for anyone who wants to start up. Just a second, guys. Oh, just give me a minute. Oh, okay, I'm back. And when we start our startup, so how to build trust among the users or customers in early stage when a startup is not well known. How to tackle negative reviews. So negative reviews always try to take as feedback, uh, as constructive criticism, because at that early stage you really can't do anything, right? I mean, if you're Zomato, अब गूगल में जाके कोई 1 स्टार रिव्यू दे रहा है, और देते ही है लोग रोज, right? They ignore because they are at that scale. But when you are at such an early stage, you don't have an option. So pehle to you have to understand whether that negative review was something which can help you modify your product or build it better. Otherwise कोई जान के ही कर रहा है तो just ignore it. How to build trust among the users or customers in early stage? By building an exceptional product, no doubt. आप जो भी solution offer कर रहे हो, a good part of a startup life cycle is just trying to keep reiterating your product, right? Trying to improvise on the go. So कई बार ऐसा होता है कि founders start with an idea, and जब तक कि उनका product materialize होता है वो कुछ और ही बन चुका होता है. A lot of times that also happens. So yeah, by building an exceptional product or service, whatever you're offering, and taking feedback in good spirit, and don't get negatively affected by it. Just take it in good spirits and keep improvising the product. That's how. um, as a founder, how to efficiently use initial funding amount in the growth of the startup so that it does not. Okay, by not getting carried away, Ishan, two major points. Early on, when you say, for example, you secured a 50 lakhs ka funding, अब एकदम से फंडिंग मिली है, you get carried away, you get an office space, आपने एक fancy सा उसमें interior करा लिया, all those things are not needed. So know where to burn your money. Your money should, whether it is funding money or bootstrap money, it should only be spent on getting more customers. So CAC could be one thing. CAC is your customer acquisition cost, right? You can pump in a little more money once you have funding to get more customers. That is one thing you can do. So not get carried away on building a office space. Agar office space की need नहीं है, keep continue working from home. Don't upgrade your lifestyle, and don't spend unnecessarily on um, unchannelized marketing, right? अब क्या होता है कि marketing, people tend to hire these companies to do marketing for their startups. You have to understand whether your customer base requires that channel or not. Matlab, whether through that channel your customer base is even coming or not. So, and third most important, don't just go on expanding your team. अगर आपका काम वही 3 लोगों से चल रहा है, just because you've raised funding, don't go on to getting 10 more people and then again getting carried away and unko salaries pay karne lago aap. Ultimately, if there is no outcome, if your customer base is not increasing, this will be of no use. So these are the three things you can keep in mind if you've raised funding. Aryan says, well, thank you, Aryan. There are, if there are any more questions, I'm happy to take. Otherwise, you guys can also connect with me on LinkedIn. I do a lot of pro bono consulting for startups also. I used to charge for my startups, but since you're students, it's free for you. If you want me to review your deck and if you want any suggestions on how you can improve your deck, I'm always available. Kushi, maybe you can drop in my LinkedIn to these guys. They can connect with me. Just drop in a message that you connected with me through this session so that I would know, because I get a lot of requests on LinkedIn and then my limit would be exhausted. So yeah, guys, I would love to connect with you and hear some great ideas, and hopefully some of you will end up making some great startup. That's the goal.
Thank you so much, ma'am, for such an insightful and engaging session, for taking out time
Okay.
for us and like sharing so valuable insights. Like I literally got to learn so much, and I'm pretty sure everyone did. And I had a great time.
Thank you, Kushi. Yeah, so just closing note, guys, if you want to just talk to me about anything, connect with me on LinkedIn. I'm always available, to help you out. Yeah, thank you for having me, Kushi. Thank you, Vikram, also, who invited me. I'm not sure if he's there on the call. But let him know that I said thank you.
Yes, ma'am, for sure. Thank you, ma'am.
Thank you, guys. Bye.
Also, I would like to thank all the participants that actively interacted with the speaker, and thank you for your engagement. Yeah, Vikram, go on.
Guys, I have dropped the LinkedIn ID of the ma'am. If you want to connect with her, you can send her connection request to her. Okay. And please scan the QR to fill the feedback form. Those who will fill the feedback form will get the certificate, and it's of course will help us to improve the sessions in upcoming weeks. Thank you very much.